Hi, gold traders. For those who bothered to go through our exercise posted on our Telegram channel yesterday, where we linked to a previous video, you should have spotted this consolidation period following the parabolic move up from Sydney Open yesterday. That was, as we hinted in the exercise, the beginning of accumulation that then led to the spike up on Sydney Open today before this manipulation playdown. After a failed attempt at a retest of the latest all-time high, price turned around from here to grind lower for a significant retracement. This morning's BBC News got in on the gold action after it hit the latest all-time high, with a segment that interviewed a gold analyst who said that we might see gold hit 3,000 today that would, no doubt, have motivated quite a few inexperienced traders to hit that execution button and bang in a major lot size for a buy position. In our previous video, we responded to a comment that stated gold would be heading to the 3,000 level this week and warned traders not to chase the bull from the top and not to blindly assume that the 3,000 level would definitely be hit this week. Not chasing the bull from the top means waiting for strategic dips or evidence of buying during any consolidation phases before going long. Now let's talk about that 2,800 floor we discussed in the previous video. In that video, we identified a couple of triggers that would crack and collapse that level, but until either of those happens, if price gets anywhere near 2,800, expect bargain hunting buyers to pile in and take price back up with a powerful trending move. However, even getting close to 2,800, let alone cracking it, is a dream for buyers at the moment, as gold is being bought back up, even at shallow pullbacks from the secular track higher, with today's more powerful pullback being somewhat of an anomaly in the context of the current aggressively bullish price action. Now, what will it take to get gold to break above the latest all-time high and test 3,000, either by the end of this week or before the end of the first quarter? We need to start with this week's listings on the economic calendar that are all about the US dollar and inflation, but in order for gold to start gearing up for another run at the 3,000 level, it's going to be all about the trade wars triggered by Trump's tariffs. The European Commission and EU national leaders have said that they will not hesitate to retaliate if Trump imposes any new tariffs on EU goods. Even if Trump makes another U-turn, the mere threat of tariffs and the ones imposed thus far will have done lasting damage, and that should support gold into further dizzying heights. The markets still haven't quite acknowledged that Trump is like a bad poker player who thinks he's actually winning and the only one sitting at the table who is strapped up with automatic weapons. With the exception of less than common parabolic moves, price does not move up or down in a straight line. So here at GVFX, we are only concerned with identifying setups from strategic price points or zones and take profit with level-to-level moves and are not distracted by those levels, waiting to be hit that will break records and make headline news. Finally, it should be noted that we need to see price remain above 2,852 through the remainder of this week's news events, such as Powell's testimony in Washington, the US CPI and PPI, especially if Trump delays his tariffs against the EU. In the meantime, trade safe and take care. Please do hit the like button and leave a comment.